Welcome to my 10 lessons I've learned from investing in small cap stocks. Lesson number 9, selling. Now, if you bought a small cap stock, there's a good chance you'll have to sell it. But where and when? Because if you sell too early, you could miss out on potential massive gain. If you sell too late, you could incur a big loss. So when do you sell? And it's always very hard. And I try and stick to 3 reasons to sell, okay? And reason number 1 is the story has changed significantly or it's ended. And I'll give you an example of this. Has the story changed? So the main reason you invest in that company in the first place, has that changed? And I'll give you an example. N4 Pharma is a biotech company, and it happens a lot with biotech companies. Their lead drug was called Sidnovel. Now, it was a reformulation of Viagra, so a massive market potential. All right. Now, they did a test on this clinical trials, and it failed. The first clinical trial, I don't know if it's the first one, but it failed the trial. So now they've dropped that drug. And they've gone with a second product that wasn't their lead product. Now, to me, that's a significant change in the story. The reason most people invested in that company was for that reformulation of Viagra. That is no longer happening. The share price has gone off a cliff. It did bounce, but it's gone lower again. So when that happens, the main reason investors change, get out. Full stop. Now, I'll give you another example. Cora Gold I'm invested in. You may say I'm biased, but that's had a share price drop of late because the story's changed, but not the main story. And I'll give you an example. They have 15, they're a gold explorer in Mali. They have 15 drill-ready targets, areas they can look at and explore. Their main target is Sanankoro. That is phenomenal grades. It will be a standalone mine. So that on its own is the reason I invested. Then they did some drilling at a second target called Tekleduka. They didn't know it was there, but they did some drilling. The first set of drill results were phenomenal. Through the sky. Absolutely excellent grades. The second set weren't as good. They weren't bad, but they were average. The share price took a knock. I'm thinking, well, hang on, they've got 15 drill targets. Their main project is fantastic. Their second project is okay. It still has potential. It's down the road from having big resources, which they can truck the stuff to the ore to and get it processed. So still economically viable. But the share price has taken a knock. So the main story or the main theme hasn't changed. All right. So that's why I'm still invested there. So that's an example 1. Now, also about the story ending. Has the reason you invested in a company, has that happened? The significant milestone you invested for, has it been achieved by the company? Is there another big milestone in the future or not? Or have they achieved it and the share price has risen and done well? If you can't see any more significant milestones that will drive that share price, also worth considering selling. So that's what I'm saying. So that's reason number 1. The story has significantly changed or pretty much it's ended. Reason number 2 is to de-risk. I said in video 1 that risk is probably the most important thing when it comes to small cap stocks because they're very volatile. You do not want to overexpose yourself. And my rule is generally, a rule of thumb, is I try and stick to 10% of my entire portfolio value. I will not put more than 10% value in any one stock. That's maximum. I try and stick to the maximum. If I think a stock is riskier but has potential, I will maybe 5% maximum. So I'll adjust that rate. But at the maximum level I want to go is 10%. Now, if a stock does really well, and like doubles, and let's say everything else being equal, you have a portfolio worth £10,000, just doing it for round figures, and you put £1,000 into a stock, that's maximum 10%. It doubles, so now it's worth £2,000. Generally, so that will be worth, everything else being equal in your portfolio, that will be worth 20%. Now, I'm not comfortable with that kind of exposure in one stock. Okay, so this is just me. These are my rules, of course, my strategy. You may feel comfortable with less risk or more exposure. So I will then sell half generally. And so I'll bring that exposure back down to 10%. So that's another reason why I'll sell to de-risk. If I think the company is still majorly undervalued sometimes, because it's not a bad problem to have, one company taking up a big chunk of your portfolio because it's rising. But if I think that company has a long way to go, I did it on recently on Predator Oil and Gas, I was up 300% before I started selling. And generally I will start to do that 100% because I still thought it was very undervalued. But in that case, I brought it back down to 10% of my overall portfolio value. So that's reason 2, to de-risk. Reason number 3 is to allocate the capital more efficiently elsewhere. So I only focus on small cap stocks, and the reason for this is, like I said, there's big risk but potentially big reward. Now, as companies get bigger, they move more slowly. That means there's less capital gain to be had in a short space of time. So they're less risky but less rewardy. for want of a better phrase. So if I've invested money in a company I believe could do, and it's moving slowly, it's getting bigger, and I think I can allocate that capital elsewhere more efficiently, I get more return on it, I will generally scale out, scale down. I may sell the entire lot if I think in conjunction with number one that the story's ended. But if the story hasn't ended, there's still room to grow there. I'll keep it in there. I'll scale out. But can you allocate that capital elsewhere more efficiently? You have to keep recycling your funds and looking elsewhere. You should never try and sell out of boredom or because you perceive something's gone wrong when it hasn't been reported. I've done this loads of times, and I've ended up regretting it just completely. I've had a bearish perception on something, and I've sold something, I've been impatient, and the share price has gone on to achieve that milestone I invested for in the first place, and it's done really well. So I try not to. Like I say, having a strategy is one thing, sticking to it is another thing, but I try not to just sell out of boredom or because I feel a little bearish. I try and achieve the goal, the initial goal I invested for. So, like I said, generally, I look for 10 baggers. So, if a company achieves a one bag, it should do that. I look for companies that has the potential to achieve 10 bags by value generation. That means 10 times its initial, valuation. So, one bag shouldn't be too much of a stretch, and then you de-risk and look for another company. I hope that's okay. So, 3 reasons I sell: the story significantly changed or ended, to de-risk, or to reallocate the capital elsewhere more efficiently. Hope that makes sense. By all means, if you could, download the Vox Markets app. It's free. Go to voxmarkets.co.uk. If you've got any questions, please, reply below. I'll get back to you as soon as I can, so I'll put a comment below. And please, like, share, and more importantly, subscribe. And you'll get my next, my last lesson in this series straight to your inbox. And by the way, if you hit that little bell next to the subscribe button, you'll get a notification on your phone as well, I think. So please subscribe and hit that bell. Thank you very much for watching, and I'll get my next video out to you as soon as possible.